Hello traders, welcome to another daily analysis. Today is December 8th, Thursday. We're right at 6:30 p.m. Eastern Standard Time. So let's get into our daily recap. So last Asian session, we had the trade balance data from China, which we saw both exports and imports surged largely, especially the raw commodity such as the iron ore. Now, of course, this become a very good positive sentiment for Australian dollar, regardless of Australian its own negative GDP data that came out this week. But the positive Chinese data actually supported very well. And London session was relatively quiet, as everybody was waiting for these ECB rate and conferences. And finally, at a New York Times NY session, the rate decision came out as expected, unchanged. But traders and investors are really looking out for the conference. And so 8:30, we are following the conference. And here are a few highlights. So first thing is that the ECB has reduced the monthly purchase from 80 billion to 60 billion. So that's a reduction of 20 billion. Will take effect on January 2017. But they also extended the program. Originally, people expected to extend it for 6 months. They actually extended until December 2017. So it's a quite long extension. ECB Draghi emphasized that they can actually change the volume back to 80 billion if necessary. And also saying that the tapering is a plan, and eventually what happened, eventually want the bond buying program to become zero. But as for now, a complete removal is not on the table. And also they maintain a significant presence in the market even after December 2017. They also adjust the asset purchase program, the minimum length from 2 years to 1 year to help address the issue of bond scarcity. So what is the main highlight from it? The main highlight is that they actually trying to find the balance between hawkish and dovish. So on the other hand, they reduced the volume from 80 billion to 60 billion. But on the other hand, they extended the program to much longer than people originally expected. So right now it's going to be in December. So these two alone really didn't play much effect. They sort of hedge each other out. But it's what the real message really lies down to the press conference. It really lies down to the tone of the ECB and sort of the atmosphere. So although if you're reading just by articles, it seems like a balanced result. But if you actually follow through the conference, Draghi keep emphasize that he can actually change the volume back if necessary. That's the first sign of negativity, that even though they reduce the volume, but they actually are looking forward to change it back if necessary. The second thing is that they say that ECB will still maintain a presence for quite a long time. That means that even though they say December 2017 as a deadline, but it's not really a deadline, because as usual that they say the March 2017 was a deadline, but now it's extended. So they can actually extend it that very well, by next year. And the third thing is the most important thing, is that fundamentally, what is the situation right now in the Eurozone? The situation right now is that the whole market is still a deflationary market. We still have very low inflation. The economy is still not picking up well. Now, on top of that, in 2017, you have these two major elections from the biggest two countries in Eurozone, from France and Germany. Now, that's, no matter what the result is, just anticipation, just the election itself is going to create a lot of uncertainty. So at this moment, the last thing ECB wants to do is to create more uncertainty economically. Now, of course, ECB always say that they are neutral. They don't really care about each country's election and individual politics, things like that. But of course, they will take into consideration. It's only human to do that. So that's why looking at this report, it does look neutral, but in realistic term, it become very negative for euro dollar. It's because they are emphasize that they can increase the volume anytime, and they can extend it further of the period anytime. And on top of that, fundamentally, it's just not a high inflationary market. It's just not picking up. So they have to keep stimulate the market. And that's what happened today. You see euro dollar actually went up for initially, and after the conference, it just dropped significantly. So right now, euro is really pretty much, one of the worst performing currency right now. The other data we have in New York session is unemployment claim from US, which came out as in line, not really a major data. WTI closed today at above 50 with solid candle. So once again, it's picking up quite well. The equity market also closed green to give us another risk on sentiment there. So right now, the risk appetite is quite large. Now later on, we will have the inflation data from China. That's of course going to play an effect into Australian dollar. Now, news-wise, for euro dollar, again, the biggest news is the ECB conferences, and as I mentioned, right now it's quite negative, for the future for euro. British pound, vice versa, as mentioned that whenever euro is positive, pound will be negative, and vice versa. So today euro is negative. That caused a lot of strength into British pound. So again, it's not because any major news happened in the British pound. It's just the natural correlation between euro dollar and British pound. So British pound, of course, is still largely pressure when versus US dollar and other currencies, but it's gaining the strength when versus euro dollar. So what is my stance in terms of British pound? Well, we have news from the High Court that the court hearing is now over. That means they will have the result out as soon as possible. Fundamentally, as mentioned, that the parliament member already saying they are going to back up the Brexit plan. So it seems like Brexit is a fact for sure. It's not going to turn over anymore. However, if the High Court ruling comes out as in favor for Parliament, that's still going to cause a short-term bullish strength into British pound. That's still going to cause a short-term volatility, and that's what gets me worried right now because I am in the British pound position. I'm shorting it right now, and tomorrow is Friday, it's the weekend, so I'm really hoping that the High Court will announce its decision tomorrow, so that I can decide whether to hold my trade or just get out altogether. As I mentioned, I do have this confidence knowing that the British pound is going to drop, but I don't know how large this short-term volatility is. And the last thing you want is to get stop out in this kind of short-term volatility, only to see it goes to your direction later on. So that's just something to take into consideration, that even though you are very convicted fundamentally for a currency, whenever there's a risk event, it is really your best interest to either move your stop loss to break even or just get out altogether prior to the events. And the reason is because you never know. And I repeat, as a trader, you will never know and never be able to predict how much volatility this event is going to be. No matter how long you're in the market, it's just impossible for you to predict the volatility. So the best way when you don't have enough clear direction is just stay out. It's a very simple, straightforward thing to do, but a lot of people just don't want to stay out because they are long-term for the action. But for me, that's really a recipe for disaster. So if you don't know well enough, or when you are in doubt, always get out. So that's what my game plan is. Right now, I am in this, this pound newsy trade. But I'm worried about the High Court ruling. So, later on in London session, I will actually monitor live to see what's going on and maybe adjust my stop loss hourly by hour. Because again, last thing I want to do is to get stuck out in this trade over the weekend. Although I do have a faith for New Zealand dollar over British pound, but I don't know how much volatility. And if I don't know how much volatility is going to be, I rather stay out. Canadian dollar, as mentioned, is highly correlated to oil market, especially nowadays, because the internal condition and the economics data, the central bank policy is very neutral right now. So if the internal condition is very neutral, they're only going to go with the external factor, which is the oil market. Now, since the oil market is going went up today. So that's what happened to the Canadian dollar. Now, one thing to mind you is that the OPEC producer are going to meet this Saturday to talk more about the detail about the agreement. Originally, there was 14 OPEC producers, but right now only 5 of them are going to attend. So that was the news nowadays. So again, that's really not positive news. You have 14 members who agree to do something last week, and when people are going to follow up, you only have 5 left. So from my perspective, it's not. It doesn't seem to be a very good progress so far. But nevertheless, it's still a very well supported currency because nevertheless, in a long-term fundamental perspective, the oil price is going to go up a little bit. We just don't know how long or how fast and how much it's gonna go. But if you are holding any Canadian dollar trade, I would really suggest you to close that over the prior the weekend, prior tomorrow market close. Again, because you have these kind of risk events over the weekend, which you really have no way to manage your position when the market is closed. And that's actually the very good benefit about forex trading is that the market only closes this once a week. So for a lot of other days, you can actually do a lot of major to manage your trade, and that's only the benefit in this currency exchange. And that's one of the reasons I really like currency trading over stock trading. New Zealand dollar, and as mentioned, it's actually one of the strongest currency we have right now because both internal strength and external risk on appetite is just really playing a very good benefit into it. Australian dollar also is the same spot as New Zealand dollar, but of course, because of the GDP data that was so negative this week, they did not have enough bullish strength as much as New Zealand dollar. But because the risk on appetite, they are still very bullish. It's just we are not looking to buy them in terms of daily. In terms of hourly or intraday, it's really we'll go with the flow, right? We buy them against weaker currencies such as Japanese yen and Swiss franc, but only if the market provides us with a good trend. Now, Japanese and Swiss franc, once again, are the two most negative currencies, and it's really going to be like this for quite some time. Really, no other major news coming out. But again, they are actually quite happy to see their own currency weaken. That's going to help the export. So they are not in a hurry to raise their currency up. They're actually happy to see it. Now, the only thing you need to watch out is for any global big events to avoid the short-term safe haven inflow. Now, US dollar continue to be our rising star, especially now since the fate of euro and British pound has been decided. Both are very bearish, and that will make dollar become more positive, sentimentally speaking. Of course, the uncertainty is the next Wednesday's Federal Reserve meeting. So you have to be careful because right now a lot of people were trying to place position, they'll try to remove position. So you expect to see some volatility that is completely nothing to do with the fundamental of US dollar between now and next Wednesday. My game plan, of course, is still buying US dollar in the intraday trade, but if it does not go uptrend for the day, then I don't want to keep catching. It's like catching a falling knife, right? Because I know right now it's just really largely price action. But fundamentally, after next Wednesday, we will have a very clear direction, and doesn't matter what happened next Wednesday. Even though the Federal Reserve does not hike the rate, it doesn't matter. It's still a fundamentally strong currency to buy. So why we are waiting for the events to pass is just we want to remove the uncertainty. It's not because the events is going to play. Of course, it's case by case. Sometimes the events is going to play a significant direction. But for US dollar, the Federal Reserve is this rate hike or not hike is actually not going to play. It's not going to direct the fundamental strength of US dollar. It is going to cause a short-term volatility. It's going to give a lot of sentiment play, but in terms of the fundamental, it's just the events that we're hoping is to be done, right? To pass, so that we can resume buying it with more certainty. So I forgot to type it here, so let me do it. So right now we are still looking, we are still looking to buy US dollar, New Zealand dollar, Canadian dollar, and Australian dollar. But for Canadian dollar and Australian dollar, only for intraday. And we are still, sorry for my typing, as you can see I'm not really good at. We're still looking to sell Japanese yen, Swiss franc, Euro dollar, and British pound. But for British pound, only sell against US dollar and New Zealand dollar. Well, only sell against the above currency. Well, actually, it's no brainer. Of course, it's only sell currency. So right now, really looking to long dollar yen. We're looking to long dollar Swiss. We're looking to long New Zealand yen, New Zealand Swiss. We're also looking to long CAD yen, CAD Swiss, and Aussie yen, Aussie Swiss. We are looking to short Euro dollar, looking to short cable. We're looking to short Euro New Zealand, Pound New Zealand, Euro CAD, Pound CAD, and Euro Aussie and Pound Aussie. So that's pretty much what we're looking to do. Of course, it's just, I give all these trade alerts just for you to play around with your own technical strategies. It depends on, because everybody has different technical strategy. It's really the most I would say exciting, but also it's very individualized, basically, exactly how you want to play the price action. So that's why it's really up to you. But just give you this currency pair, it's just to give you to give you a fundamental and sentimental strength, saying that these pairs have the underlying strengths fundamentally and sentimentally. You can definitely play with your own technical strategy, but you will have a better chance to play with these few currency pairs. Okay, so let's get into our 28 pairs for now. Just give me 1 second. Let me get my 28 currency pair. All right, right here. Okay. So first thing first. Today I did took 2 intraday trade. I firstly took Aussie yen during a London session at this very bullish big candle. It did not. Oh, sorry. My bad. At this bullish big candle, it goes against me and goes up and goes down, goes up. So I got out at almost break even. I got out probably -5 pips because it's not going anywhere, and I just get out. Another trade I took, I was looking to take is again New Zealand, New Zealand Swiss, but New Zealand unfortunately did not get filled. New Zealand Swiss was fantastic, but I missed this trade basically. Otherwise, this was a great trade. I also took CAD yen, which works out pretty well. I took at this bullish candle. It goes against me for a few hours, and then it goes. It is hourly chart. It finally took over. Right now, I'm at break even plus. I'm at 1-on-1 already, basically. So I'm just looking for it to maybe keep going higher, so I can trail it, and I might just get out altogether later on. It's really depend on what's gonna happen in the Asian market, but not to worry because I am break even already anyway. So that's 2 good trade, and let's take a look at our hourly, our daily trade right now. So that daily trade, Pound New Zealand. So that's the one I'm in right now, and as mentioned, we did got filled, but it's not really strong. To be honest, we actually stopped at this support, and that's what gets me worried. Is because New Zealand dollar is very strong today, but so does British pound. So now I'm wondering, exactly how much momentum I have for this thing to play out, and that's what gets me worried. So I'll see what happened in Asian session and in London session altogether, but most likely I will just trail it in hourly chart. I will trail in hourly chart and maybe reduce my stop loss by the swing high. So maybe I will put, right now, two previous swing high. This is a first swing high, second swing high. So maybe I put at 1.7663 and then just keep trailing down. That's my game plan for now. But I'll see what happened. Nevertheless, it's just not something that I really want to hold over the weekend for now, because of the I just don't think there's enough momentum. So that's what I'll do. I will actually trail by swing high, so two swing high, or you can trail by a moving average. But for me, I'll just trail by swing high. I'll move it to 1.7660. 1.7660. Yep. Maybe I'll move to 80. Just give it some time to breathe. I'll move it to 1.7685. Okay. So I'll give it time to breathe and see if we can take out this low right here at 1.7495. So basically, we did not really break above 74 because it's just a peak down and it goes up right away. So I want to see if we can break down 1.7495 later on to keep holding this trade. Otherwise, I'm just going to get out. So right now, I am moving it to 1.7685, which is 30 pips loss up to where I am right now. I am changing right now. 1.76. Oh no, it's actually, oh my bad. It's actually, okay. It's not 80 pips. I forgot to read this. It's 130 pips against me. So I am going to change it there. 1.7685. 1.7685. Okay. All right. I have moved it. Just give me 1 second. 1.7685. Okay, so let's keep going. First, take out euro. So euro pound, my bad. Daily chart. Euro pound today, again another drop for euro and another bullish into a British pound. Euro Swiss, huge volatility. You're gonna see same pattern, pretty much in all the pairs. Euro dollar, Euro Swiss, Euro Aussie. Same as Euro CAD. And whether I'm going to place any trade for euro, well, not really, just because first of all, I have a great candle, but I don't have a great for euro pound. I'm not looking to buy pound or sell euro because they both are negative. As soon as the high court ruling comes out, that's going to change the strength of British pound, or it's either gonna give more strength or it's gonna weaken it. For euro Swiss, I don't want to buy into Swiss franc, although I'm bearish in euro. Euro dollar is a great pair to short, but it's not in a good position right now. Right, you're just really shorting at this support. And again, as mentioned, this kind of candle is really highly disregarded because this kind of events it's a one-time event, right? So I'm not really looking to short it for now. Euro Aussie does looks good, but again, not in a good position basically. this will be a much better candle, but of course that's always prior to the news. So not in a good position to short for me. Your CAD, same thing, there's no signal. Your New Z, fundamentally great pair to short, but again, this was a great signal, but it's not really a inverted hammer. It's not really a bearish kangaroo tail, but it was a great signal right here. But again, we didn't get in because it was not a signal, and we don't know whether the ECB meeting is going to be positive or negative, right? Euro yen, again, a very good candle, but we're not looking to short euro or against yen because they both are very bearish. Pound Swiss, again, not looking to take any British pound trade at this moment, since we already have one pound New Z in. Pound CAD, pound New Z is the one we're currently in right now, so hoping for it to keep dropping. Pound yen, and that's pretty much it. Swiss franc, Japanese yen, dollar Swiss. Dollar Swiss has a good surging, but again, for me, it's not something I'm looking to take just because the position of it. We were just right at this range area. Dollar CAD keep dropping. So this is a very interesting area. If we have any signal like this, along with a negative news into the oil market, that would be a great place to trade. So this is a good spot to look out. Dollar yen is another bullish candlestick today. Not for me, it's just a range bound. Again, not bullish enough to do anything at this position. Aussie Swiss, Aussie dollar. Aussie is, it's only good when you are buying against euro and Japanese yen or Swiss franc. Aussie yen, don't have anything right now. CAD Swiss, huge drop, huge up today for CAD. CAD yen. I think Swiss franc is actually the weakest currency today. It is, yeah. So it is the weakest currency. So it's either Japanese yen or the Swiss franc. It's just these two are fighting for who is the worst currency pair. CAD Swiss, CAD yen, and now let's take a look at New Z Swiss. Again, huge up day. New Z dollar have a little bit inverted hammer, bearish kangaroo tail. Not looking to short because they both are very strong currency. New Z CAD, again, not looking to short New Zealand dollar, New Z yen. So that's pretty much it. Again, I don't really have anything right now. I'm really not looking forward to take anything, to be honest with you, just because the weekend is coming, and really the last thing I want is to get stuck into a trade. So the only thing I monitor right now is really this pound New Z trade. I'm hoping is to keep dropping below 75. I'm hoping is to keep going lower. That would be great. My stop loss has removed right now at 76.85. That's my new stop loss at 76.85. I'm going to remove this. So 76.85, which is higher than today's high. So 76. So maybe, you know what? Maybe I'll move to 76.65. But I use 85, again, just in hourly trade to give it more room. 20 pips higher than today's, 25 pips higher than today's high. So 76.85 is my new stop loss. And let's see what happened. And in terms of my CAD trade, I am still here. Maybe I will move my stop loss to here, 86.30. So 10 pips lower. Well, we'll see what happened. But yeah, if it's not going higher anymore, maybe it's sort of a range bound right here. So maybe I'll move it to 86.30, Okay, so guys, that's it. I don't really have anything else to trade. I will be back tomorrow to give you a week recap, week wrap up. For members, watch out for London session analysis. I will give you my trade code for the following session. Otherwise, feel free to comment below if you have any question, if you find this video helpful or not, and just let me know. Otherwise, I'll see you tomorrow. Have a great trading day. Bye bye.